Oh man, so a big green morning for Bitcoin. We're up 3.8%, but more importantly, we are creating a critical longer term pattern here on Bitcoin, which could finally signal the bottom. Yes, the bottom. I'm going to break through what this pattern is, what it can mean in the short term, where we could be getting to, but also what could the longer term implications be, because this pattern potentially has the possibility of creating this bottom and starting our reversal back to all-time highs. Yes, guys, loads of alpha packed in this video. We're going to cover off the macroeconomics as well. We're also going to look at on-chain metrics to see if it's matching up with the technical analysis I'm going to be sharing with you. Make sure you hit up the like button. Don't forget to subscribe. As always, we're going to show you a really interesting trade pattern. So if you guys want to trade this with me, you guys know where to head. It's BYBIT. Links in description. Up to $4,000 in bonuses using BYBIT, and I'll be doing all my spot trading, not leverage or margin trading. I'll be doing my spot trading using BYBIT like I always do. So we covered off yesterday. In fact, let's just quickly recap what we were doing over the last kind of few days. We knew that the move was going to take us to the downside. We predicted that in the previous videos, and we set the technical target perfectly. Similarly to the upside, we took a long and we ran that long all the way to our price target, which was brilliant. Again, if you haven't seen that over the last couple of days, you got to catch up. But then I mentioned very clearly that we could be getting rejected from this 4-hour EMA ribbon. And you can see exactly as we predicted there, we did not get the break on the EMA ribbon, and the EMA ribbon acted as resistance. In yesterday's video, I said, okay, now this is where it gets critical. When we get rejected from the EMA ribbon, this is the chance for the bears, okay? So the bears here, they want to call off. They've just sprinted. They've gone for a really long race here and pushed us all the way down to our lows of 17,600 roughly, right? At the bottom of there, 17,600. I'm going to remind you later on in this video why 17,600 is so critical here, that is exactly where we bounce. You guys are going to, this is going to blow your mind when I show you this. And then you had the bears calling off, right? And the bulls managed to get a nice move. And I said, don't get excited. Feel free to trade this, guys. Make a good little bit of profit. And if you guys did, you would have made a nice return here. And this is what you need to learn to do in a crypto winter. Is you've got to take advantage of these movements and build your bags, right? So here in this situation, a nice 22% move here on spot on Bitcoin. If you traded this on any of the altcoins, you would have made even more. But on spot on Bitcoin, you cannot complain. That is not too shabby at all if you're picking up 22% on your bags and growing that to put into your long-term fund, right? So that is the move we got. Now what happens is you would expect fully that if the bears have called off enough and if there is still in control, they would go ahead and reattempt the 17,600. Now that is why this curling over the last couple of 4-hourly candles has been so critical through the night here. So this is really positive what we're seeing here in the short term here on the 4-hourly chart, and we need to make sure we're not confusing our time frame. So don't make this, I don't want you to say, oh, look, this means we're good now on the weekly chart. No, I'm showing you on a 4-hourly chart. This is a good sign now, okay? Because we're getting this curling off. In other words, this is a higher low. And this is why this is significant. Let's remove this EMA ribbon for a second. And let's come on over here. What we are creating on the 4-hourly chart by creating this curling over is the right shoulder of a head and shoulders pattern. Very, very important. You can see here we've got our left shoulder, okay? So the bears tried to push us down. They couldn't go beyond this point here at 20,000. The bulls come back in. The bears goes, oh, no, we're still in control. They push us down to our low of 17,600. The bulls fight back. The bears go, nope, we're going again. But this time, the bears could not go back to 17.6 here on the 4-hourly chart. So there's some good strength here by the bulls to say, no, we need to recover. Now, what we need to look out for in order to trade this successfully is a break of the neckline. This diagonal line here is what's called a neckline on a head and shoulders pattern. Now, when we get the breakout, what you want to be looking for is two things. One, which is what I was sharing with you guys yesterday, I'm just going to switch over to the hourly so you guys can see this a little bit more, is when you get this next move to the upside, you want to see that the bulls are able to create a higher high. Now, the previous high was just about here at 21,700. So what I'm looking out for is this move. Not only does it need to break our neckline, but I'm going to get much more confidence when we get to like 21,800. Now, it's fine even if we touch there and come back and retest the neckline before then taking your move to the upside as well. There's nothing wrong with doing something like that, and that is perfectly fine as well. So, but the main point I wanted to make is I want to see us get above this pivot point at about 21,700. So normally you feel quite confident when you get the break of the neckline. Let me just tidy this up here. Let me remove this arrow. We'll switch back over to the 4-hourly. So normally when you break the neckline here, you feel quite confident that, okay, we can take the long on the position. And that's perfectly fine as well. But I'm going to be more confident when we go above 21,700. Just to recap, you want to see it break the neckline, go above there. Even if it wants to come back to retest, that's perfectly fine. And then you want to see this ride up. Now, what is the technical price target from a pattern like this? Well, the technical price target is to take the measured move all the way to the lows. Let's see if I can get myself a trend line. And what we'll do is we'll take this all the way down to the 17,600 line. We'll take this to the point of the breakout. Let's say we break out at about here. And this move could potentially take us to about 26,000, let's call it. Let's round that out to 26,000. This move could take us here on this technical breakout. Now, that's a quite interesting move. And again, if you guys want to trade this specific setup, you can do so on BYBIT. Links in description. And you guys can get up to $4,000 in bonuses, which you can use to trade this move. So it's a good way for you guys to practice. Again, be very, very sensible. Have your risk management in place. Like I said to you guys, during this kind of crypto winter, I will be looking for trade opportunities like this. But now let's focus on whether this could be the long-term move, which gets us out of a bit of a pickle, because I'm a bit conflicted on this. Now, the first thing we need to understand is what's going on with the macroeconomics, okay? We can head on over and you can see that the pre-market is slightly flat. So we've not got much clue here about what's going to go on, okay? So the Dow's flat, S&P's flat, and the Nasdaq 0.6. And they're trying to mull over what Jerome Powell said yesterday. If you haven't watched my video on that, go click here. I'll leave that video linked up for you guys to see what Jerome Powell said yesterday. But again, Jerome Powell will be speaking as well. So it's all very well and good me showing you a technical pattern on a head and shoulders pattern, but we have to marry it up with the fundamentals as well. So if Jerome Powell comes out and says something really hawkish or really silly, that can nullify your pattern, and that is why you need to have your stop losses, you need risk management in place for taking such a trade, okay? That's very, very important in terms of the macros. Now, the other thing is, a lot of what we need to understand is this now going to be the reversal? Well, let's remember that the price target of this move is about 26,000. Now, if I bring you over to a chart like this, a clean chart, and I bring out the EMA ribbon, the good news about such a thing here is if we run up to 26,000, which is about here, that will then make us extremely bullish on our EMA. We would have flipped our EMA ribbon, and now we'll be in a bullish trend. The bulls are in control on the 4-hourly chart. However, if I flip on over to the daily chart, you will see how far extended we are. And this is what will put it into perspective for you guys. This is the daily chart, and this is how strong the bears have been, okay? They've really sent us all the way down. So even a full breakout on that head and shoulders pattern, meeting our target at about 26,000, whilst it's very positive and it's a good step to get us out of the rut we're in, let's put that into perspective. That would bring you about here on your EMA ribbon. In other words, you are neutral on your EMA ribbon. You're right in the middle of the EMA ribbon, not even going all the way to the top. You can get rejected all the way to the top of your EMA ribbon. So in other words, to give this to you in another way, in order on the daily chart for us to become bullish on the daily time frame, we need to close above 28,700 or 28,800 here at the top of the EMA. So that is a good move. It'll make up for a lot of this. But still, even after that move, which you can successfully trade, the bears are still in control. They can do this after another couple of days. Okay, so very, very important. And that's why we need to understand different time frames. We can be bullish on a shorter time frame, like I'm showing you a inverse head and shoulders pattern, which is a bullish pattern, right? If you break out from the neckline, you can get a nice impulse move to the upside. But equally, even after that is played out, we then got to be making sure we're taking our profits, because that doesn't mean we can't be sent back to the downside, because even at 26,000, we are only halfway through our EMA ribbon and the bears continue to be in control. Now, just to reiterate that, let's head on over to this chart. Let's remove our EMA ribbon. And this is the daily chart here on Bitcoin. Now, what you'll notice is pretty much from the all-time highs when we started falling down, we've continued to create various bearish continuation patterns. In other words, bear flags. Big move down, consolidation, another big move down, consolidation, big move down, and a consolidation. So the question arises again, is this just the same? Are we just consolidating before another move to the downside, right? Now, the good news is, as you can see, these consolidations are getting smaller and less powerful, which is good. So arguably, can we start reversing? Can we start getting our way back to these high levels? That's ultimately what we need to do. The issue for me is marrying that up with the longer term fundamentals. And at the moment, we don't have clear sight in the economy for how the risk can come back on, for how the market can settle down and start to accept what's going to go on, because we're still, the next 6 months are still going to be quite painful. So for me, the best case scenario is we can have a good sideways action on crypto over the next 5 to 6 months, and we have opportunities to accumulate. For me, that's what I'm getting prepared for. Okay, so now let's try to marry this up with some on-chain metrics. We've had some really interesting on-chain analysis to look at. And the first one is this. Let's just remove me out of the way. And what you'll see is we've had 3 consecutive days of greater than $2.4 billion in losses. Okay, so 7.3 billion lost in just 3 days. And this realized loss, by the way, this is a realized loss. I do want to explain what that is. A realized loss is when somebody actually selling their Bitcoin at losses. So $7.3 billion worth of Bitcoin were actually sold at a loss. In other words, somebody capitulated. They saw red in their portfolio and they sold in the red. So they would have bought in at a higher price than the price they sold at. Okay, $7.3 billion of that. Now, if we look historically at when this has happened previously, this happened a few times. Okay, so this has happened a few times, but the spikes, this one is a new record because the previous spike when we fell in summer of 2021, when we ran down to 29,000, you can see that was lower, okay, but it's still high. The previous one we had was when you look at the COVID crash here. That was nothing compared to what we just seen. This is the realized losses during COVID, and then you can go back to previous bear markets. But this is a huge skyscraper, and it's unprecedented times, right? And this is what's causing a lot of the liquidity issues as well in the market. The next thing to look at is supplier profitability. Now, supply profitability. Now, this is important as well. Now, these are characterized. I know this chart looks complicated. In essence, you got 4 color lines you want to look at, okay? The red are your long-term holders, their supply, and currently 65% of long-term supply holders are currently in profit, okay? Of all supply, 49% of supply is in profit. Addresses, 55% of addresses and wallets, and UTXOs, 73% are in profit. Now, why is this significant? Well, the reason this is significant is maybe we have not quite hit the bottom fully just yet. And this is how I've been feeling. I've been saying that in my videos over the last couple of days. A lot of people saying I'm coming across bearish. I just want to come across prepared. I just want to be prepared that if we're going to have one more leg to the downside, I want to make sure I have dry powder already. And I've not just allocated it all into the market now when we run up to, let's say, 26 on the head and shoulders pattern without thinking, oh, maybe we can still have another wave down after the 26. So I need to have myself prepared because the reality is here. You can see that the supply, if let's look at, move me out the way, the supply here is 65, okay? Long-term holders supply, 65% are in profit right now. Now, put that into perspective. In COVID, only 56% of them were in profit. In the 2018-2019 bear market, 58% of them were in profit. If you look at all supply, 49 versus 40. If you look at addresses, 44 versus 55. In other words, there's still a little bit more to go. We're not at the same percentages as was in the 2018-2019 bear market, not even the same as the COVID crash. So what you could argue is that people are still in profits in more of a percentage than they were in the 2018-2019 bear market, okay? So hopefully that gives you guys some insight. Now, this is the other one, which is absolutely going to blow your mind. Now, what I want to show you here is this is the Bitcoin difficulty regression model. Now, what this aims to give you is the pink line will give you the rough, easy way to think about it, the estimated all-in sustaining cost for a miner, okay? Now, I'm going to explain why this is important. Now, you'll remember that on Bitcoin, when we bottomed out recently at the low, it was 17,600. Now, look at this. Look at this. Let's move me out the way. Look at where the regression model came in. So Bitcoin touched exactly at 17,600 before bouncing back to 20K. And that was exactly where the regression model came in at for the estimated all-in sustaining cost of a miner. That is where they were breaking even according to this model. So very, very interesting. And again, maybe another reason why crypto may want to go back to that 17,600 level, just to test it one more time, to flush out the weak hands, to test any other liquidity issues in the market before then saying, okay, we've tested it. We've had a double bottom there at 17,600. Now can we work our way back to the top? Okay. So that's what I'm looking out for. This is still a good pattern. I don't want anybody to think this is not a good pattern. On the 4-hourly chart, this is a nice pattern, and I'm expecting a nice move. So on this 4-hourly chart, let's continue to monitor this. And if we can get to the neckline, there's no reason why we can't start working our way towards 26,000. The question is, after that, what happens? Do we really think we're just going to go 30, 32, 33, 34? If we do, fantastic. But chances are the bears are still in control. And what reminds me of that, whenever you're just getting a bit too ahead of yourself, head over to the daily chart and just pull up this chart with the EMA ribbon. And you'll remind yourself that if and until we don't cross 28,000, we continue to remain in the controls of the bear. We're not even neutral at that point, okay? So very, very important that we've got a lot more work to do here on the daily. The other thing which we have to add on is on-chain metrics, like I've shown you, plus the macroeconomic conditions that don't really necessitate a massive move to the upside again, right? We'd have to see a serious decoupling from equities and Bitcoin just say, you know what, I'm going to do my own thing in order for that rocket to happen. And it can happen. And that is why we need to prepare ourselves, right? But first and foremost, I'm preparing myself for the downside, because that's the option that most people neglect. They neglect the downside to have the hopium behind the upside. And that's what gets you in trouble, because then you FOMO in, you're like, oh no, I'm not going to get Bitcoin back at 20,000. And you pile in all your cash. Keep a little bit of that dry powder ready, just in case we wick back down to 17, 18, 19, and you got a little bit of dry powder to pick up at some of those lows. Hope you guys enjoyed this video as always. Don't forget to smash up the like button and subscribe. If you want to trade that head and shoulders pattern, inverse head and shoulders pattern, do so using BYBIT. The link's in the description. Don't get yourself wrecked on margin or leverage. I'm trading it on spot. And I suggest you guys do the same. If you're inexperienced, make sure you're doing so with just a bit of lunch money or some dinner money or some shoes which you're not buying or a jacket. And that is the best way to learn how to trade. If you want to join our 3 times weekly course member live streams, ijaz.uk/member, we can walk you through how to trade, technical analysis, fundamental analysis, macroeconomics, and a whole lot more. Thanks for watching this video, guys. And I'll see you in the next one.